Greetings traders and welcome back to today's video. So in today's video we're going to be doing a weekly outlook video, and so I've gone through my watch list and I've selected a few pairs that I'm going to be looking to trade throughout the week. And so I'd like to take these pairs and share them with you guys, share the insights around why I've selected them, share the understanding around what we could anticipate in terms of our draws and liquidity, share key areas, key uh, premium and discount arrays, right? That I'm going to be looking to, looking for price to hold and potentially look for confirmations on those areas, right? In any case, with that being said, let's get into today's video. Cool. So we're going to be starting with EURUSD. If you have watched the video that I did last week, the weekly outlook video on the Sunday, in that video I was explaining, in the beginning of the video I explained the phases of a market, right? That the market will always look to do two things. Generally there's three, right? The third one is consolidations, but you're not going to look to trade consolidation, so we'll exclude that. So the market will always look to do two things most of the time, right? Which is the market will always look to draw towards external range liquidity or towards internal range liquidity. Whatever chart you're opening, it's either going towards external or internal. You just need to understand which one is it doing. So what is external range liquidity? External range liquidity exists at highs and lows. It's buy stops, it's liquidity pools, that type of areas, right? Highs and lows. So at your lows, you're going to get sell stops. At your highs, you're going to get buy stops. External range. Your internal range liquidity exists between a low and a high. In that area, you want to look for a fair value gap. If the fair value gap exists, that is regarded as your internal range liquidity. External is liquidity pools, internal is your fair value gaps, right? So what the market tends to do is after external range liquidity has been taken, the market will look to draw towards internal range. From internal range, it will find support, draws towards external range. We see the market draws towards again external range. After that is taken, the market draws towards internal range. Fair value gap is filled. All right. From the fair value gap, which is internal, we want to see the market draw towards external. From external, we want to see it draw towards internal. So in the previous video, last week's outlook, the market was here, and then I spoke about how we want to then see the market draw towards our fair value gap, right? And so that was the draw of the previous week. Now that we are in the fair value gap, we are in internal range liquidity. What do we anticipate over here? For the market to draw towards external range liquidity. So that, as easy as that, is our draw on liquidity for the week, right? This doesn't mean that there's no chance that the market could push lower and invalidate this fair value gap. That is possible. There's still another area that we can look to trade, which is this bullish order block, right? But if price breaks this fair value gap, meaning if this following week's worth of trading closes below this fair value gap, we're going to hold off of Euro USD. We're going to wait for price action to give us a clear indication of what it's looking to do, right? And if it reaches this order block, then we want to look for confirmation, etc. There's also another area of support over here, which is our redelivered rebalance price range. Wait for that. So we'll hold off of Euro USD for quite some time until we get a clear understanding of what's most likely going to be happening. But at the moment, we are at an internal range, so we want to see the market draw towards external, right, in this week's worth of trading. Let's look at the 4-hour. Cool. So this is the 4-hour. Previous week's video, I spoke about when the market was still here. This was the weekend, the Sunday. We spoke about how I might be looking to anticipate selling off of this rejection block, provided that my kill zone, if the market was still here in my kill zone, which is at 2 a.m. New York time, I'd look to sell off of that area. So we can see how Sunday took out the high coming into Monday. What happens is very interesting, and I will teach you guys all of these things when we get into the mentorship. This candle over here breaks that candle's low. Immediately, this becomes a reclaimed order block. So notice how this candle over here, the high, wicks into that order block, reclaims this area. Further selling is anticipated over here. So there was a clean 15-minute confirmation with the SL on this candle's high to target a 1:2 for the market to reach over here. So we can see how we are in a sell side of the curve and we've reached our area of support. What we anticipate here is for the market to give us an indication that this area over here is in fact most likely going to hold. How will it do that? We want to see the market break a previous high. We want to see a market structure shift, right? So the market may continue lower, may even wick this area. It's still in the sell side, condition. The moment we get that market structure shift, a candle break above a previous high, that gives us an indication that this area is now going to hold and we might be entering the buy side of the curve. So on EURUSD, that is what I'm currently waiting for throughout the week. All right. So we're waiting on EURUSD. Cool. So moving on to USD again, what has happened? External range got taken. The market eventually pulls back into internal. From internal, we see external. We took out external, right? Now, what do we want to see? The market draw towards internal. Now, not to complicate this, but the draw at this point is towards this order block. All right. The reason for that, and I will explain all of these things again when we get a into the mentorship, right? In any case, at some point, this area over here was a redelivered rebalanced price range. So when the external range liquidity had been taken, my draw was towards this redelivered rebalanced price range, which was also aligned with that bearish order block, right? In which we see the market respected the bearish order block. But the problem was that when this candle opened, it closed above that order block, right? So if this was a redelivered rebalanced price range, going back into what I spoke about last week, that meant that this fair value gap was a breakaway fair value gap. I was not anticipating the market to pull back into this fair value gap. In fact, I just wanted it to pull back into the redelivered rebalanced into this bearish order block and then look for further selling to target the sell side liquidity, the external range. But since it got violated, the next draw is then this bearish order block. I'm not sure if that is confusing, right, or not. But the next draw is towards the bearish order block and potentially towards that fair value gap. So currently we're still drawing towards internal range liquidity, right? And then from internal, we would then want to anticipate the market having to draw towards external range liquidity. But with that being said, let's look at the 4H. Cool. So that is our clear draw. And so what has happened is, of course, we got this pullback on USD CAD. We wanted to then first see a market structure shift towards the upside, and there it happens. This is in fact a break of structure, so we now know that that USD CAD is in fact bullish. And so at the moment, you can see that I am currently in a trade. I took this trade on Friday. What I am looking to do is see the market continue higher off of this area over here. This is currently a mitigation block, which is holding as an institutional support zone. This mitigation block is also aligned with a reclaimed order block, right? Which is also aligned with a bullish order block, right? So you have multiple support over here, which is suggesting further bullishness. Cool. And the other thing as well, this candle over here, after taking out these sell stops, we get this heavy rejection towards the upside, which means that this area over here is currently a rejection block, meaning this area might be a strong institutional support zone for the price action to continue higher. We already see how we wicked into the rejection block and then we started rejecting, pushing higher, right? So the draw on USD CAD is bullish. Right, let's move on. Cool. I'd just like to talk about AUD USD. There is no draw, but if you watch the previous video that I spoke about that I released last week Sunday, speaking about the weekly outlook, of course, the market was currently here, and then I spoke about how we'd want to see the market draw into the redelivered rebalanced price range, right? And how this fair value gap over here is regarded as a breakaway fair value gap, that we might not see the potential of the market drawing all the way here, but we'll see it draw to this area, find support, and then continue higher. So, of course, we see how it drew into this area, and then from this area, we see how the market then drew towards external range. So, looking at AUDUSD, currently there is nothing that we can do. I currently have no drawn liquidity because it's either I want to see price action take out a high and then draw towards internal, and then from internal draw towards external. Once the external has been taken, like for instance, this isn't even external, it's just a high, right? We know that it's going to continue further bullish potentially, but there is no trading, or there is no trading that I'll be doing until I get further confirmation to do so. I just wanted to show you guys this because of the 4-hour time frame. Cool. So I'd like to just show you guys this because this is really cool. We see how the market pulls back into the redelivered rebalanced price range. Like I mentioned, we're going to pull back into this area, and then we're going to find buying opportunities towards the upside. So what happened was we got that market structure shift. After that, we pulled back into a fair value gap. Confirmation on the M15, target 1:2. Confirmation again once the market had pulled back into this bullish order block. Um, and then confirmation on the M15 to continue higher so as to target the previous week's high. All right. In any case, there's no draw that I have over here. I just figured it would be cool to show you guys this. Looking at EURGBP, again, external range liquidity was taken. The market draws towards internal. From internal, we want to draw towards external, right? So let's go on to the 4H time frame. Cool. So looking at the 4-hour, I mean, we did speak about this in the previous week. How this fair value gap would look to hold. I mean, if you're looking at all of these things as a fractal perspective, in a fractal perspective, understand that what exists over here is external range liquidity. After external, you want to see the market draw towards internal. From internal, you want to buy to target external, right? And so these are our minor targets, but our major target is over there. Cool. So what are we anticipating this week's worth of trading? So we already see we have this fair value gap. The market already uh, tapped into it. And so we might see continuous bullishness towards the upside, and we might not get a further pullback in here. Who knows? But the idea is to find an array. If the market continues higher, gives you another fair value gap, you want to look for confirmation on that fair value gap to continue higher. If the market does open, takes out these buy stops, and then pulls back, um, there's or breaks this high, you'd have multiple areas of support. This would hold as a mitigation block, which would be aligned with that fair value gap that you could look to buy off of. The market could also pull back into this area, which is our breaker block, where we could anticipate the market having to mitigate previous mitigate previous selling orders to reinstate new buying orders, right? So we can see how this is a clean support zone, which was once a resistance. In any case, the idea here is to look for bullish arrays and enter for those arrays to continue the market higher. Cool. Looking at EURJPY, we have a clear intent that the market is just looking to push heavier. The clear draw is, of course, that high over there, but we understand looking at the market, we took out the external range liquidity, and we'd like to see the market pull back into internal range liquidity. We don't want to force it. It's a matter of if it does give us a confirmation to look for selling opportunities into the fair value gap, and then we'll look to do that, right? But yeah, let's look at the 4H time frame. So clear intention for the market to sell into the fair value gap would just mean we'd want to see the market give us a break of structure towards the downside, a market structure shift. And if that occurs, then we want to look for bearish arrays, order blocks, all of those things to sell in that direction. But we can see that the market is clearly bullish, right? So this is just a waiting thing. If it does give us the confirmation, then we can act on that. But if it doesn't, it's still fine. We're just not going to trade the pair, all right? GBPCHF, really cool pair. Look at this. Again, we take out external range liquidity, pull back into internal. What's the next draw? External range liquidity. Let's go on to the H4. Cool. I usually don't swing, but this one I really did. Quarter one is the 6 off of this guy. We did talk previously in last week's video when the market was still here about this bearish order block. I did mention that all we want to look for is a bearish array to continue the market lower. We see how Tuesday taps into the bearish order block. We reject that mean threshold, which is that middle price. We swept this previous high, and then we got confirmation to sell off, right? There are, of course, multiple areas where you could have entered. You have this redelivered, rebalanced price range. Um, Confirmation over here to sell off. You have the order block confirmation to sell off. So the idea is you see what's happening. It's fractal. The market continues lower, takes out external, draws towards internal, takes out external, draws towards internal, takes out external, draws towards internal over here, right? So that's currently where we're at. And so we see how the market pulled back into this fair value gap. Would be cool if we get another pull back again, or market pulls back into this mitigation block. Who knows what the market is going to look to do? But the important thing is to understand that wait for a P array, a bearish one, look for confirmation, continue selling. That is your major draw on liquidity. We will get to these things when we do the mentorship. You will be able to enter the market anywhere. You'll not anywhere, but you will have a clear understanding of where, what is most likely going to do. You'll be highly reactive. All right, let's move on. Cool. Again, USD CAD, oh no, USDCHF, external range got taken. Spoke about this last week. We want to see the market draw into this fair value gap. Currently, this high is the same as that high, so we want to see that draw. On the H4, again, in last week's video, we spoke about how we want to see buying off of this area. Price didn't really give me a confirmation over here, but we saw the buying. Market did pull back, took out these sell stops, didn't break it. So clear rejection, right? This is just a sweep. What are we seeing this week? We're seeing that the market had pushed higher. We're currently at a reclaimed order block. We took out external, pulled back to internal, fair value gap got filled. There's also a rejection block over here, so there's clear support to continue the market higher, right? So that's what we can anticipate. We look for confirmations here to buy the market. Looking at NZDCHF, external range got taken, drew towards internal. From internal, we want to see the market draw towards external, right? Now on the H4, we spoke about this last week. I spoke about this region over here, reclaimed order block. I spoke about how the market would reject this area, and we see that external range got taken. The market pulled back into a fair value gap over there. Nice selling to target a 1:2. Over here, the market pulled back. It didn't sweep this high, it broke it. So at the moment, we're currently bullish. It also broke that high over there, which was an intermediate time high because it filled a fair value gap. So currently, we are bullish on NZDCHF on the H4. So what we want to see is a market structure shift towards the downside, right? Once we get that market structure shift, so it could be something like that. Immediately you get that pull back into a fair value gap or order block, look to sell, all right? That is just what we are anticipating on NZDCHF. Cool. Looking at NZDUSD, again, buy stops were taken. You want to draw towards internal range liquidity. Over here, you have redelivered, rebalanced array, which also indicates or justifies why this is a clear order block to look to find support and buy off of, right? Cool. So NZDUSD on the H4, we have the sell side of the curve. Over here, we got the market structure shift indicating that we are looking for further bullishness, right? So we have a few arrays. We have this bullish, reclaimed order block where we can look for confirmation to buy off of. We do have a rejection block as well, confirmation to buy off of. So that is currently the draws that I'm looking at in this week's worth of trading. Kind regards, the architect.